Hey, good afternoon, everybody. This is Bob from Trade Genius. It's the 12th of August, and I'm going to go through the main indexes because really that's all that really matters now. China is dominating the news with the forget the trade stuff. That's all theater. It's all about Chinese devaluing their currency or not devaluing their currency and our reactions to it. China devaluing their currency is net bearish for our stock market because they're going to wash in deflation with it and puts our companies at risk. So as it inches up, it pushes pressure on the market. But having said that, it's kind of limited, double-edged sword for the Chinese because their imports go up in price as well. And we're talking food stuffs, we're talking energy, and we're talking their raw materials. And so it's not a panacea for them at any rate. If they produce those things internally, then it'd be a big problem for us. But it's also a big problem for them. So I'm not too sure this time because we've seen what happened before. Trump already is quick on the trigger with the tariffs, and he already named them a currency manipulator so they can operate even faster. The other thing about China we got to worry about is Hong Kong and what will happen there if the Chinese overplay their hand in trying to stop the protests going on there. And dictators aren't people who like to negotiate and turn down the heat and the rhetoric. They believe that they're infallible and they're basically narcissists and can't understand why people will not kowtow to them. So they'll overplay their hand, and what comes out of that is who knows. But it's not good news for China at all. They'll lose access to the Hong Kong favored positioning, and it'll cause a lot of grief, and the Chinese will lose access to dollars. So those are things they kind of keep an eye on. But having said that, is that we had that big cascade down last week. We pushed up into the not quite into the middle bar here. This is three standard deviations, looking back 100 days to one, and we failed before we got to the high area. I mean, midpoint area here, which is kind of bearish, but we're still trending higher. And then we got a swing buy today, which is basically this area here is relative strength talking to us. This area here is stochastics talking to us, and these, which you don't see on this because I'm using it in another index. I have one for the futures that actually looks at money flow too. And so with this hitting and we're in an uptrend, we got to respect it. And so, and we're going to turn around Tuesday. Now, if it fails tomorrow, then we're looking at a retest down to these lows right here, and even brings into play too. If not, we're gonna continue to push higher. All right, and so that's that. And so what's else we're looking at here is gold just keeps driving higher, and the more the Chinese screw around, the stronger gold gets. But gold's getting a little long in the tooth. I mean, this parabola here in this linear regression, I mean, you're looking at a Pearson's number of zero point 0.9. This is pretty steep, and we've got, and here's that money this right here too, is that we're hitting stretches here, and then it consolidates and blows up, consolidates again, blows higher again off of the buy signal here, and but when you get to two standard deviations, now you're starting getting percentages coming in. See, when it pushes up like this, it comes back towards the mean, okay, and now it pushed up again. So maybe we look for another consolidation at the very best, consolidating across the channel here. So we'll have to wait and see on that. But gold has been strong, but it's been pushing pretty hard. Either it knows something, it continues to know something people don't know, or it's just getting a little bit overbought right now. And then if we swing over to, I think I'll go to the Nasdaq here. Where's the ends? Here we go. So here's the Nasdaq, Nasdaq looks a little bit stronger than SPY. Didn't quite get pushed down quite as far. Also on the SPX index, and looking looking pretty decent here. And here's what I talk about the buy pressure. This is money flow basically getting to extremes and blasting up out of those extremes, and those are really good trade areas. So whenever you get a cluster like this, you got a cluster at 3 standard deviation. This was a no-brainer buy. And then here's the warnings here saying, hey, you might want to trim, might want to trim, might want to trim. And then all of a sudden it plunged. Okay, so that's that. And then take a look here, see what the Russell's doing. Russell's the weakest of the 3 sisters. It's already trending down. So, you're looking at opportunities to look for shorts in those situations. And so small caps are suffering a little bit here. And then what we took profit on today, we had 2 trades that stopped out as we moved stops higher, is MAG. And let's see where I put it over here. So here's MAG. Had earnings. It pushed all the way up. I slid the stop up to 345. I mean to 1235, and then pushed all the way up to 1290, but came back. A little bit of a stop hunt, but it caught mine. But I don't care. 7.5% holding it for less than 2 weeks. It's the 3rd trade like this that's worked for us. Mag Silver's is definitely becoming a favorite. And then you can see these clusters of sell signals. Okay, this should tell you, hey, you got good profit, find something else. And so those are things to look at. Got a cluster of buy signals you bought. And the other one we took here was just because I was worried about turnaround Tuesday, is we were in a bank short. We were at SKF, but I was in the puts for XLFs, but this was the equities for people who don't like to or can't trade the options. And as it pushed up, we bought it at 17 on Friday, and it was pushed up to 1735 area. I moved the stop up to at least get us at 1%, and it came down and tagged it before it moved higher. So I'm out of that trade, but we made 45% on the option for 2 days. I can live with that. And we're just slowly getting out of positions here now, and just kind of watching to see where this thing goes. The next 6 weeks is usually pretty volatile, but it doesn't have to be. I've seen August trades that have gone sky high before they go into the fall too. So you just can't put a blanket statement here, and we'd have to worry now with China on one side, Fed on the other side. There's going to be a lot of news here, so you can't get too committed to too many things right now. You just have to take the trades and take profit or cut position size, because it's not a normal market. When news dominates the market, it gets almost impossible to predict. And what you'd look for is reason why standard deviation lines are so helpful, is that when you get a move down like this, algorithms start kicking in and will propel it both ways. So you just look for these. If you weren't here, let's say you caught this trade and you went down, and I guess I stopped myself out, made good money, and it pushed up to here. When you get a candle like that should be good enough to go ahead and take a trade and take a scalp if you're trading the futures. And if you're buying puts, an IWM or something like that, then same diff. So if you look at IWM here, see it hit the 2 standard deviation up here, and you might want to take a shot at some puts here. So and then now look, at this thing went too far too fast. So on this day right here, usually the signals is not. Basically you're going to be caught in this candle here. You're not going to be this back candle, and you're going to be somewhere in the candle. I don't have it turned on for the end. I have it turned on whenever. So you'd have bought somewhere in this range here if you were buying. And if you were buying some calls, you'd have pushed it up, and depending on how you like to trade it. But then it started rolling back down again. So you got to be quick. I don't live the day now where I'm not reducing size. So you can be wrong in these trades and make money if you're able to buy in and out of your positions, and also in and out on options and do spreads and stuff like that. But this is not a market. This right now, this is volatility chop. So just have to look for opportunities like this. Take your money and run. Take your money and run. Take your money and run, and live another day. So anyway, if you want to trade with us, we're happy to have you on board. TradeLikeAGenius.com. We're embedding these signals into our programs, and we're trying to provide as many visual cues as we can without cluttering up with too many indicators flying around. So they work pretty well, and we're having a great run this summer, and love to have you join us. Talk to you later. Thanks. Bye bye.